So we'll start from a set of lengthy problems here. So this one is a NPV problem. So first we'll start from the required. So the required is calculate the net present value of the dance and drama franchisee proposal. So we'll start from here. Franchisee for You Limited markets for a range of franchisees which it makes available to its customers for the franchisees. F4U supplies the franchisee with information of the mode of operation, detailed operation schedules, and backup advice by phone and internet, and undertakes national advertising. Each franchisee must arrange for its own premises, equipment, and undertake local marketing. F4U is considering the introduction of a dance and drama franchisee, which would have an expected life of 6 years. From this project, the only income F4U will receive from the franchisees comes from the initial franchisee fee. Okay, so that is going to be the income. The following estimates have been made relating to the cash outflows and inflows for F4U in order that F4U can evaluate the financial viability of the dance and drama franchisee proposal. So these are the numbers that we have. First, let's read the numbers and then we'll start proceeding with the table. Initial investment of 6 million. This will include a substantial element relating to the intellectual capital required for the proposal. Development and improvement cost of 1 million per year. Okay, so this is for per year we have to pay. At the end of each years 2 and 3, only in the year 2 and 3 it's going to get incurred. 300 franchisees will be sold each year for a free fee of $20,000 per franchisee. Variable costs payable in full on the issue of each franchisee are estimated at $6,000 per franchisee. Directly attributable fixed cost is 0.6 million per year in each of the years 1 to 6. No further fixed cost will be payable by F4U after this period. Corporation tax at the rate of 30% payable in the year in which cash flow occurs. Tax allowances are not available on the initial investment or development or improvement cost payable by F4U. All cash flows are stated in current prices and with the exception of the initial investment will occur at the end of each year. So the cost of capital is 11%. And finally we have to calculate the NPV. So we'll start from here. So to do this problem, we need to first set up a table so that it's quite easier for us to work out. So we will work out this answer first in terms of thousands so that it is easier for us. We'll work out like this and we'll start with the years. So years we'll put it on this side. We have done all the sums using years on this side, but as this is a lengthy problem, we have to put it on this side. It starts from year 1, 2, 3, 4, 5 and 6 because the life of the project is 6 years, so it has to be the end up to 6 years. So the first one is the income, so that we'll put it here. So after the income we have other expenses, so other expenses we have to note it down. So we have an initial investment, so that initial investment is usually put in the last number. So we'll put initial investment here. And any other cost is there? Okay, they have several costs which are like they have development cost, the next one is variable cost, the next one is fixed cost, The next one thereafter is tax. We have profit before tax. Okay, I don't think there's any other cost here. I think we can start the sum. So we'll start from the income. Also, we can start from the initial investment itself. So initial investment is 6 million. So we'll put that here. So it's going to be 6 million. Okay, million is 10 lakhs, and we have to do this answer in terms of thousands. So our answer will be 6,000. Okay, so we'll go to the next one. There is going to be a development cost of 1 million each year in the second and third year, right? So it's going to be 1 million. Again, it's going to be 10 lakhs divided by 1000. So it's going to be for 2 years for second and the third year. So we have done the second point, and they are going to sell each year. Okay, 300 franchisees will be sold each year at a fee of 20,000. So if you want, we could put it like this: 300 franchisee will be sold at 20,000 rate. We are working the sum in thousands, so we have to put a division like this. So we'll just check it once more. 300 franchisees into 20,000. We work out the sum in thousands, so the answer is 6,000. It's going to be for all the 6 years. So the next one is going to be variable cost. So variable cost is 6,000. So there are 300 franchisees. Each franchisee has to be, we will incur a cost of 6,000. So this would be the cost element. So this cost is a minus number, right? It's a variable cost, it's a minus number. So it has to be represented in minus. Thereafter, we have other costs such as attributable fixed cost, which is 0.6 million. So we'll take this and we'll put it here, and which is going to be incurred in the years 1 to 6. So it is 0.6 million. Do we have anything else? Yes, we have corporation tax, and it is 30%, and it is payable in the same year. So we'll put it as at 30%. So first we'll get the profit before tax. So profit before tax is a simple calculation. You get the sum of all the above numbers. Now you copy it and you paste it across. So you got your different types of profit before tax. This is an important number. Thereafter, we calculate 30% tax. So that is going to be of this number, 30%. Let's see whether it works. 30%. Okay, it works. 30%. So tax is usually a negative number, so we will put minus 30%. So we'll copy it and paste. So tax is done. So we have another number called as profit after tax. So that's going to be a sum of, or we can just simply add this with this. We got a number. So our sum is done till here. So we have an initial investment. So that alone is there. We have it, all the numbers here. So the cash flow, see, even though it's profit, how can we get the cash flow? Should we add the depreciation back or like that? Nothing has to be done because we don't have any depreciation as such in this problem. So there's no deduction or addition or anything. So just simply get this number plus this number. Okay, simply what you're doing is you're getting every number in the last row. Okay, you are getting it in the last row. So you got the cash flow. Now your job is to get the discount factor. Discount factor for this problem is 11%. So the first discount factor will always be 1. The second discount factor will be the previous cell divided by 1.11. If it's 10% means we put 1.1. As it is 11%, we put 1.11. So hope you guys got the idea here, right? We can get it for all the years. We got all for all the years. Now we have to get the DCF, discounted cash flow. So discounted cash flow is very simple. Take this number, the cash flow number, multiply it by the discount factor. So now we got for all the numbers. Finally, we'll get the net present value, which is the final number. So let's see what happens. We have to get the sum of all these numbers. So we get a value of 3580 number. So as it is a positive number, what would be our suggestion? As NPV is a positive value, we can accept the project, right? So that's about the sum here.